Last year, X marked the spot for a lot of investors as people eyed gold as it neared all-time highs. So why is gold capturing our attention still today, and can shifting monetary policy, an economic slowdown, and elevated volatility create a positive environment for gold? We're going to break it all down for you right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore. Thanks for joining us. We're going to get into this gold conversation with the man himself, Max Gold, who's been a frequent guest of ours in the past. Max, nice to have you back in the studio. Good to see you.
Anthony, great to be back. Thanks for having me.
Yeah, it's a pleasure. Obviously, it was a really important time to be talking to you about this because last year, if you look at fourth quarter, from September into October, all the way through mid-December, late December, gold had an unbelievable performance and even made a record in December, right before the holidays. Just give us your 411 here on what do you attribute that move to? And it was an historic move in the way that it moved from where it was at September to the record high that it hit in December.
You're right. You hit the nail on the head where Q4 was very strong for gold. And I think that's just a representation of its outperformance and resilience throughout all of last year, 2023, and what I see continuing so far in 2024. But last quarter in Q4, two key drivers in my mind were what was behind gold's movement up to a new all-time high when you look at the spot price. The first was geopolitical turmoil. Obviously, the uncertainty in the Middle East that was happening began in October throughout all of last quarter, has continued to date, has certainly added a risk premium to the market, and investors have been moving to more defensive assets like gold for diversification against market volatility or any kind of pullback. The second is interest rates, and I think this is even more dominant when you look at gold's performance over last quarter, where we saw interest rates, the U.S. 10-year Treasury went from 5% down to 3.8%, so a drop of about 120 basis points on the 10-year. That was very good for gold. Gold tends to do well when interest rates are falling or low, and I do think that change of expectation is what supported gold alongside that geopolitical uncertainty.
Right, and we're consistently talking about what the next move for the Fed will be. Recently, with Jay Powell's comments, we can't expect that it's going to happen in March, but our CIO thinks maybe they'll start cutting rates in May. And in addition to that, and kind of matching what SSGA is talking about with gold, definitely see an opportunity here as we're preparing for some volatility and obviously some changes in the macroeconomic environment with the Fed moves. So, but the interesting thing is, when you look at spot price of gold, where we had the chart a few minutes ago, it performed really well. But then you look sort of at the ETF side of it, and it looked like investors were staying on the sidelines. What's the disconnect there?
Yeah, that's very interesting because a lot of people have been saying, well, the price has been resilient. It's maintained over $2,000 an ounce all throughout January of this year, yet investors have been on the sidelines. And I like to take a step back and really put context to the gold market globally writ large, because at the end of the day, gold is a global asset supported by multiple types of demand sectors. That includes global jewelry demand, industrial and technology demand, think electronics, smartphones, iPhones, iPads, electronics like that, as well as central bank demand. And that's been a huge sector of growth and increase in demand in recent years, last year especially. And I do think when you put that global context together, that is what supported the gold market, despite investors, particularly through funds like ETFs globally, have been on the sidelines. It's interesting you point that out. You know, if you look at the gold price over the last 3 years, it's up about 8-9%. But holdings in global gold ETFs, funds that invest directly into physical metal, have dropped by about 20%. And that's historically a breakdown of correlation that we don't usually see. We tend to see the price and the assets in funds that invest in gold be very strong. And that breakdown can be explained by those other demand sectors, particularly central banks, which have been very aggressive in buying gold, and last year bought gold for the 14th consecutive year since 2010 through 2023.
It's interesting when you kind of go through the list of the different pieces of equipment, electronics, et cetera, that gold is used in. I don't know if a lot of people realize that gold is more than just the jewelry that's hanging around people's necks or on hands, or even those gold bars that we think about when you think about gold. But it's used in, it's a component for so many different things. Subsequently, by the way, and this is what I'm going to ask you next, is we think here at CIO that despite the environment and the way that gold has traded last year, we do think that there's opportunities on the ETF side for investors, especially as we progress through the year. What are your thoughts there, and do you think there's opportunity for investors right now?
Yeah, I do think even in the shorter term, more tactically, I do think there's opportunities to add gold to your portfolios. I think just given the overall increase of uncertainty in the market, whether that be driven by fiscal policy uncertainty or macroeconomic uncertainty, the risk for the return of bouts of volatility, as we've seen, the implied volatility index, the VIX index, be very low and suppressed. Obviously, the stock market has done very well as of late, but I do think that just increases the need to reevaluate your risk positioning. And again, gold's track record as a low correlating asset to stocks, bonds, commodities, alternatives is well researched and documented. And I do think that if we do get a return of volatility, any kind of pullback in the market, gold is, I think, going to be a key benefit there. And I do think that looking at the landscape of 2024, there's no shortage of those potential events that could spark market volatility.
Right. And I mean, look, the charts speak for themselves. We only had the 1 year chart up there, but if we look back 20, 25 years, you and I were just talking about this during the great financial crisis in 2008 and 9, right at the start of COVID, gold just historically has been a great hedge because there is movement in an upward direction on price, while sometimes the S&P 500 on the equity side will be going down. So clearly, as we look at these sort of macroeconomic conditions, geopolitical, as you mentioned, and some uncertainty ahead, it seems like gold is a really solid place to at least be part of a diversified portfolio.
Yeah, I recommend that regardless of your risk objectives, risk profile, gold can have a part of your portfolio strategically long term. Its diversification benefits, its ability to serve as what I refer to as a core risk management tool for your portfolio. It hedges against a lot of different types of risk. It's really can't be overstated. I do think that on average, investors are underweight gold in terms of their strategic long-term portfolios to get the best impact from what gold can bring to the table as a diversifier, as a risk management tool. But I do think that certainly there's a benefit to be had for gold in the short term and the long term. Certainly short term, shifting monetary policy, the expectation, the probability that is very high that the Fed will begin to cut rates. That would be a big tailwind for gold this year. Again, the onset of potential for disruption or volatility in multiple realms, geopolitically, market, macro, are still on the table. Gold has a great track record of providing a ballast in that environment, and it's certainly long term. The demand that's coming from other sectors outside the investment sphere is very, very high. I mentioned central banks. I can't understate the trajectory and the amount of gold that's been bought by central banks the last couple of years is tremendous. 2023 alone, they bought over 1,000 metric tons of gold. To put that in perspective, give or take about $60 billion of gold added to reserves for central banks globally last year alone. And they did this very similar amount of buying, record buying in 2022. So again, something to pay attention to outside purely the traditional mindset of what's happening with gold in context to macro environment movements, macro variables like rates, inflation, dollar. There's a lot of other things happening on the global gold market.
So in the last few seconds we have, Max, so you were kind of meant to long term here. We've gotten that question from some of our advisors. What is the 5 to 10 year outlook for gold? It sounds like you're pretty solid there. Kind of like a gold bar.
I do. I think when you think long term, 5 to 10 years, there's a lot of areas of support for gold. I do think when you look, overall the market has been very strong for gold since the pandemic. But investors are sort of taking on more risk. And I do think as you begin to take on more risk, think about how to hedge that risk, not just in the short term, but long term. And I do think when you look at gold, even though we haven't seen a slowdown or recession that's been expected in the last couple of years, I do think that gold can still perform very well, even if the economy is doing well. To those other sectors I mentioned, like jewelry, industrial, technology demand, cyclical in nature. What drives those sectors is increase of cyclicality. So if incomes rise, if growth is rising globally, that's good news for gold on the other half of the equation, not just the investment demand. So I do think that gold is very well suited right now in the short term, the medium term, and especially the long term to bring value to investors' portfolios of all types.
Excellent. Max, thank you very much. Yeah, it's a very compelling story, so thanks for sharing that with us. Good
Absolutely.
to see you.
Anthony, thanks for having me
Yeah,
again.
we'll see you soon. Max Gold from SSGA. And for more information, everybody, make sure to visit our Insights website at ubs.com/views. Lots of great content for you there from our Chief Investment Office and our great partners like SSGA. Plus, follow us on all the social media channels, including Instagram, our dedicated at UBS Trending account there for UBS Studio-specific content. And in the meantime, if you have any questions about your portfolio, make sure you're talking with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, and remember to keep your eyes on what's trending. We'll see you soon, everybody. Thanks.